today's session is all about how to identify the different potential trades. So before that, let me show you the price action. Okay, that is very important. So no issues with the audio, right? Friends, no issue with the audio, right? Let me know if there is some issue with the audio. Okay, so now what we'll do, we will quickly check the price action. Okay, first let me take you to the sensible. First we'll check first we'll go for open interest. Quickly we'll just spend only 2 to 3 minutes because we have discussed about all these things yesterday, I mean in all my videos. So first let me take you to sensible just to see what does the open interest has to say. Okay, for Nifty, we are on Nifty. So this is the intraday. On intraday, they were like more of put build up rather than the, what do we say, your call built up. So Nifty was a bit upside move. It clearly shows, right, 21.9 million put built up compared to 19.2 million. If you check at the historical option chain, this clearly shows for the next week Nifty might be sideways because there is not much difference between your total call built up and total put built up. That's it. It looks, based on the open interest, it looks sideways. That's it. This is the conclusion. Let's check the Bank Nifty. Okay, Bank Nifty weekly. The first box, this section is on the intraday, which was your last trading session, which was your Friday yesterday. Okay, so there were like of put unwinding, but net 20.20 million call built up versus 9.3. So it clearly shows that on Friday Bank Nifty was down because there were like more call built up. So when we check the historical, this is very important for Monday's opening. If you look at this thing, so there is not huge difference, but still we see some difference. 32.8 million total call built up versus 21.3. So I would say sideways to mild bearish. Bank Nifty is sideways to mild bearish. Simple, right? Not a rocket science. Okay, this is on the open interest. So let's see what FII has to say. Okay, this is also very important. Just click on this analyze. You have to click on this FII data, go to FII data, and this will get to this page. Simple. If you look at the outstanding, okay, so there are like this is like it says call bullish. Sorry, this says bullish and this says bearish. So net you have more quantity. So net you have more quantity, 2 lakhs versus 1 lakh. So overall the market looks bearish. Overall the market looks sideways to bearish based on the FII. If I scroll down, this is the another view. So 74,000 quantity bullish and 28,000, but this is contra. Basically this says bullish, right? This is the way people will confuse us. So this says bullish and this says bearish, but the quantity is more, 7,000. So we can just ignore this because it's not a huge quantity, but this makes a difference. FIIs went for sold. They went for short for 623 CR. 623 means for CR, they went for short basically. So whenever they went for short, that means market will be sideways to mild bearish. If this is like 1,000, 2,000, 3,000, 4,000, so then we can say market can be sideways to super bearish. If this is like 300, 400, 500, market can be sideways to mild bullish. Okay, so this is done, and now we have checked the FIIs, we have checked the open interest. So price action is left. So let's check what the SGX Nifty has to say. That is very important, right? I'll take you to SGX Nifty, but I'm not sure like why SGX Nifty is showing. So I'm not sure whether it is off for SGX Nifty or not. But yeah, looking at this screenshot, right? Looking at this screenshot, SGX Nifty is 1% positive when compared to our Nifty. Okay, if you look at this thing, Nifty closed at, what is it, 17,786, but SGX Nifty is at 18,028. So let me see the difference, but I'm not sure why SGX Nifty is show static. I'm not sure whether it is off for SGX Nifty, but let me show you, right? 18,000, right, 28 minus 17,786. So SGX Nifty is almost, is it 758? Or did I do something wrong? No, right? Sorry, I might have done the wrong. 18,021,018.28 minus 17,786. 17,786. Yeah, so it's 242. So SGX Nifty is 242 positive than the closing of the Nifty. But still, if I look at this, this is static. I'm not sure whether SGX Nifty is off or not, but based on the last data, what I see is like SGX Nifty is 1% above this thing. So we got the view of the market. Now, let me take you to the chart. So now I want you guys to answer, right? What is the view of the market based on your price action? You tell me. Whenever we go for any strategy, like today we will be discussing about all the potential strategies, but can you guys let me know, is it bearish, sideways to bearish, or it looks sideways to super bearish, or it looks sideways to mild bullish, or it looks sideways to super bullish? So what is your view? That is very important, right? I can show you all the strategies, but unless and until you guys let me know based on your price action, what is the view of the market? Is it bullish or bearish or sideways? Based on that, I'll let you know. I want everyone to answer this question. I mean, I don't even care like what price action you're using. Are you using any indicator, MACD, your pivot table, your CPR? I mean, there are like L lot of like stochastic RSI. I mean, there are like so many indicators, but I want you guys to let me know what is the view of the market. Sideways to super bearish is what Pranav says. Sideways to bearish, sideways to bearish. Okay. Others, can others please confirm? So this is my price action basically. So we are discussing about the Bank Nifty. So this is my price action. Basically the reason why I've drawn this red color is like we have discussed many times, right? Resistance 1, resistance 2, resistance 3, and then this almost at a resistance 4. It is not mandatory that any stock has to touch this resistance and respect it. Why did this stop here? Can someone please tell me why the market did not touch this resistance and it had a reversal or a sort of retracement from this point? Can someone please tell me why this did not went and took the resistance of this trend line, which was acting as a resistance? 3 times it acted as a resistance. Can someone please tell me? Right, I want this session to be like more interactive. It doesn't even make sense, right? Even if I'm, because it's from 2 to 3 weeks I'm making all these videos, unless and until why the price has reacted here, why the price has reacted here and it came down. Can someone please tell me? Okay, why that price has reacted from this position rather than it could have went up and then it could have respected, but why this happened? Can someone please tell me? Right, zone, someone said zone. Ramakrishna, can you please elaborate it? See, I'll tell you, right? What I'll do, I'll try to draw. Yes, I'm absolutely right. I'll try to draw. See, there was a resistance, right? See, what if I draw a line like this? Maybe will this help? See, okay. It's not always all time all about straight lines. See, if I draw something like this, check this price action, right? There was a resistance here. You got it? I mean, this minute things will make a huge difference. There was a resistance here, right? Resistance 1. See, the same thing now. If I zoom out this thing, right? So there was a sort of resistance. So let me take you to 15 minutes. Then you will get to know, right? So from 1 hour, see, let me take you back to 1 hour. This was a 1 hour, right? So I'll take you to 15 minutes so that you'll get to know the difference. Okay, if you look at the 15 minutes, see, don't you think this acted as a resistance, multi-level resistance? See, within this zone, this acted as a resistance. Even this acted as a resistance. See, even this acted as a resistance. Even this acted as a resistance. See, even this has acted as a resistance. So, whenever you want to do the price action, first you have to put it in the 1 hour and then you have to go to 15 minutes to check why the price has rejected from here. Right, you should ask that question, because if you look at this thing, see, there is it's not always all about straight line, it's always about the box. This is we call like support and demand box. All right, so that's the reason. If I go to 15 minutes, if I took you to 15 minutes, this is where you saw that there was a resistance in past. So that's the reason the Bank Nifty came down. Okay, so now, okay, so that's the reason Bank Nifty came down. So now, if everyone says that your view is sideways to bearish, okay, so what trade we need to deploy? Can someone please tell me? This I want this to be like very interactive. If your view is sideways to bearish, what trade we have to deploy for next week expiry? That is your 3rd November expiry. Right? You guys tell me like what trade we need to deploy if your view is sideways to bearish. Yeah, smaller time frame. Pranav, absolutely right. First, we have to draw the trend lines on the bigger time frame, like maybe like your 1 hour, and then you have to come to smaller time frame, because whenever we do the execution, we have to do the execution on the smaller time frame, so that we get like more clarity on the chart, and the execution will be. I mean, see, basically when you go for 1 day, right? You see, whenever we go to like 15 minutes, 5 minutes, you will get a good entry for the execution, but your trend line and everything should be based on 1 hour or 1 day. Only for execution we go to lower time frame. This is what you guys are going to learn from the paid mentorship. Someone asked, right, what is the difference between the free videos and the paid mentorship? This is one of the difference, right? How exactly we need to execute the trades. Someone said call ratio spread, someone said ratio spread, someone said bearish put butterfly, Rama said ironfly or butterfly. So now let's look at all the strategies, right? That's a good. I mean, see, I'm so happy to see people. At least see, Sanjay said put debit spread, right? That even that's a good call, right? If someone has the view of bearish, right, we can go for put debit spread. Even call ratio spread stands good, because we never knew, right? Sideways to bearish is something like, I mean, whenever we say bearish, market will go up, you know, right? Everyone has that feeling, saying that whenever I go long, market will come down, when I go short, market will go up, right? So these all are the good strategies, like call ratio spread. Let me take you to sensible. Okay, let me take you to sensible. Okay, where are we? I'll take you to sensible. Okay, now let's discuss about the call ratio spread. Let's discuss about first the call ratio spread, right? Whether you guys are correct or not. Okay, so this is my view of the market. Okay, I'll keep the chart in front of you. Okay, I'll keep the chart in front of you 1 second, so that you have all the visibility of the chart. Okay, now what I'll do, I'll just delete all these things. Okay, let me take you to the 5 minutes. So before that, I mean, in case if someone wants to give some other opinion, whether what is a market view, you can give that. Okay, again, let me get you to 1 hour, so that you have the chart in front of you. Okay, so now, right, you have the view of market going down. So let me say, okay, 1 second. Okay, now my view, so if I want to trade, right, my view would be, yes, this took a resistance, it came up, right? See the potential, maybe my view would be, okay, now my view would be, let me say, I'll just calculate this thing, right, from this place, from the current market price to the resistance line, what is the percentage? It says 2%. Okay, this is how I'll do the analysis, right? What I'll do, I'll go here, price range, I'll click somewhere here, I'll put it as a 2%, right? Almost 2%. Now there is a strong resistance at 2%, so I have to watch out for support also. What I'll do, I'll go here, I'll select the price range from the current market price, even I'll take the 2% range just to match it. See, this is the way I do, this is the only analysis, right? Let me go for 2%, right? This is a 2%. So can I go for ironfly? See, there are like only two possibilities, right? Point number one, market can go up or market can come down. If market can come down, this should be your support level. So do we have any strong support level here? That's the question. So what I'll do, I'll just try to see what is the immediate support level at 2%. Okay, I'll zoom the chart. Maybe I'll take somewhere here, right? I'll try to plot the rejection. I'll try to see the rejections. So maybe I see this one. For the simple reason, check this. See, whenever I say, right, for the market stands here, right? So there is a resistance. This was the resistance. Okay, and then see the resistance broken, resistance 2. So maybe what I'm expecting is this might become a support for me. Okay, now if I want to go for ironfly, right, I can go for the ironfly, meaning whatever strikes I select, I ensure that this is my break even and this is my break even. So now I can go for ironfly because market stands here. Well, let's say market opens flat on Monday, I can go for ironfly. Simple, right? With 2% safety. This could be the point number one, right? This is trade number one, right? Strategy number one. If someone said, right, the market view is sideways to bearish, absolutely. If your view is sideways to bearish, you can go for put debit spread. Simple friends, you can go for put debit split. If market comes up, let me show you that first. Let me show you how we can go for put debit split. If your market if your view is sideways too, first let me know how about going for iron fly. Okay, iron fly is simple, right? Market stands at 40,990, so 41,000. I'll sell this. So I got 400 plus 400, 800 rupees is premium what I got. So I'll go for 1 2 3 4 5 6 7 8. I'll buy this. I'll show you everything friends. 1 2 3 4 5 6 7 8. So whatever premium we got, we are just going for the edges. So this is your typical iron fly. Let me zoom it out. This is your typical iron fly. So you have the safety of, see, you have the safety of 1.3%. Again, you have the safety of 1.38 and 1.38 on the what do we see, your break even, right? This is your break even. And what is your upper break even, the buy position? Let me show you. Okay, so this is almost like 1.97. okay, let me delete. See friends, stay focused, right? Don't ask any question. I mean, sorry to say that, and hold your questions until I complete this session. Okay, now the break even 1.38% is your this break even, right? This one. So the moment the market goes beyond your break even, you will start seeing your loss. We all know that. Even until here, you will have your break even. The market goes below this, you will have. But what is this position? What is this position? So basically, that is your buy position, right? See, you bought 40,200 and 41,000, right? So now if I check the percentage, check it here, right? If I roll over the percentage, this is like almost like 1.97. check the black box which says 41,800 is your, right? It's a point, it's a benchmark wherein your maximum loss will start. Got it? So now if I roll over here, even this says 1.93%, 40,200, this one 40,200, where your maximum loss will start. Okay, so now what did I say? If I take you back to the chart, so do we have the safety of 2% here and 2% here? Okay, so what is the view? What should be the view of the market? Even if market goes up, it has a tendency, I mean, it has a critical resistance, so it might fall down, right? It will go up, not an issue, it will go up for 2%, but there is a strong resistance. What did I say? Because the moment this resistance is broken, it can make a all-time high. But do you think it will make the all-time high in a day? So maybe Bank Nifty will go up, it will consolidate here, or it will retrace, or again it will go up, again it will retrace. So this will spend some time. Based on my experience, I'm telling you, I might be wrong, right? So probability is even market goes up, it can resist. Even if market comes down, there is a strong resistance at 2%. So market can again, right, take a bounce back. So do you think this would act as a very good trade for this market view, right? This is your strangle. Okay, I mean, hope I'm able to. So I'm showing you how to deploy this strangle based on the price action, based on the chart. So what did I say? Even if the market makes a 2% of downside, we know that there is a very strong resistance, so market can again come back. So we will be able to trap the market in the green zone. Even if market makes a down movement of almost like 2%, we all know there is a strong support. Market can again bounce back. So then we can trap the market into this green zone if you are very good at the adjustments. Okay, this is one of the way you have to deploy the iron fly. If you did not understand the video, anyways, you'll have the recorded sessions. You can watch once, twice, thrice also. If you get this crux, then no one can stop you in terms of deploying the trade. This is the way. See, you should know what is your break even. You should know from where does your maximum loss start, right? This is where the market stands. This is your break even, 1.38%, 1.3%, right? But what is this? Have anyone given importance for this, your buy position? Why are you buying this? Why exactly you're buying this? Even your buy position should be in such a way that it should be aligned with your chart. This should be aligned with your chart. So you will be able to do this unless and until you have this view of the market. You have to draw your first support. You have to have like support and resistance. You need to, market stands here, you have to have your first resistance, second resistance. You have to have your first support and second support. So this first resistance is your this break even. Let me again tell you guys, your first resistance is this break even. This break even should be your first resistance, and this one should be your second resistance. Did we mapped it? Absolutely, we have mapped it, right? This is your first resistance and this is your second resistance. Same way, you have to have your first support. So your first support would be somewhere here, right? This would be your first support, and ideally this is your second support. Because I'm spending so much of time, guys, I mean, it is useless unless and until you guys are not able to understand. Please let me know whatever we have discussed so far, does it make sense or not? Are you guys able to understand the Ironfly, how to deploy the Ironfly based on the price action, based on the chart analysis? Please let me know. If you're not able to understand, right, so there is no point in making this live session. We will discuss about all the strategies. First, I wanted to discuss about the Ironfly. Even we can go for the Ironfly based on the current price action, because we know market can either go up, or market can come down. But this is your Ironfly. Basically, this is your Ironfly. Right, I'll tell you, right, this is your Ironfly. Okay, this is what I meant to say. Okay, the market stands here, so this is your first support. You know, even if the market falls down, this can bounce back, or else even if the market comes to a buy position, this can bounce back. Same thing, if the market goes up, this can bounce back. If the market goes up, this can bounce back. If it goes beyond your your buy position, then your adjustments will start. Let me show you, right? This is what I meant to say. 1 second, I'll take you. What did I say? The moment the market breaks your first support, 1 second, first resistance and second resistance, if the market keeps going up, so then the adjustments will start. It can be selling from here, it can be contra trades, it can be a lot of adjustments what we have discussed. Is it fine now? Okay, can someone tell me, can we move on to other strategies? Did you guys understood basically what I meant to say? This is not at all a rocket science, friends. This is not at all a rocket science. You have to understand the, right? Randomly you cannot deploy the Ironfly. Any strategy you cannot deploy it randomly. You have to back up with the price action, with the chart analysis, with the chart basically. Does it make sense or not? We have 52 participants, but guys, there are only 12 like buttons. Can you guys please click on the like button? It takes fraction of second for you guys to click on the like button. See, I'm putting so much of effort, but you guys are not even putting a like. I mean, you're not even liking the video. Understood? Yes. Right, yeah, beauty, because that's what, because I mean, this is what we have to do. Absolutely right. This is what you guys will be learning from the paid program. See, and again I'm reiterating the paid is like, many people have that question saying, right, what extra we will be getting from the paid program when this guy has given all the videos free end to end. This is what I'll be sharing you, all the pro tips: how to deploy the Ironfly with price action, how to deploy the Ironfly with your chart analysis, right? How to know the first break even, how to know your second break even, how to do the adjustments and everything. Okay, thank you guys. I mean, 31 likes I can see. I want few people to like the video. Okay, now let me take you back to other trade, right? We have discussed about Ironfly. This is absolutely right. What I meant to say, that's it. There is no rocket science. This is very common. Just use your common sense. That's it. Now let me take you back to chart, right? So let's say my view is market can be like sideways to mild bearish. Okay, so then, okay, let me take the black pen, right? Market stands here. So your view is market will be sideways, or else it can go mild bearish. Simple, friends. For this, we all know we have to go for what? Put debit spread. You will be surprised to see the profit whenever we go for put debit spread. See what you have to do. Basically, you have to go to option chain. Okay, what did I say? Market stands at 41,000. Basically, look out for, see, simple, look out for 230, 240 premiums, right? Look out for 230 or 240. So for me, I'll go for this premium for the simple reason being, this is your market where the market stands. So I'm getting an opportunity to go for 4 strikes OTM, right? 1, 2, 3 and 4. Ideally, I look out for 5, But yeah, if I go for 5, I'll be getting 209 profits. I'm not happy. I'll go for 238 premium. Simple. I mean, I've discussed so many times. Okay. So now what I'll do, I'll buy this 238. All right. Sorry. I'll buy, what is this? 238 I'll buy. And what I say, whenever we want to go for the sold position, so we have to ensure that whatever we bought 238, we have to go for half of the premium. So what I'll do first, I'll not look out for half of the premium. First I'll go for 5 strike OTMs, right? This is my 1, 2, 3, 4 and 5. So now I'll check whether this 120 is half of 230. Absolutely. So I'm getting, see, basically what you have to know from here is like, whenever I go for put debit spread, I want to have minimum 500 gap spread minimum. I mean, we all know, right? So we am getting a 500 spread difference here. Check it, right? 40,600 is my bought position and I'm selling 40,100. So I'm getting almost like 500 strike difference, because you will get to know why we are going for 500, because this will help you in terms of doing the adjustments. Okay, I'm not complicating. If you do not understand the video, I would recommend you to watch once or twice. This is what I've discussed in my end-to-end debit spread. Okay, so now what I'll do, I'll just go and sell 120. That's it. I'll go and sell 120. So this is my debit spread. Put debit spread. You will be amazed to see the risk to reward. Your loss is 2,950, 3,000 and your profit is almost 9,500. Believe me friends, if market goes down by 1.24%, but see, try to understand, this is your break even. 1.24% is your break even. Many people, what they think is like, the moment market goes by 1.24%, I'll be getting my maximum profit. That is wrong. Absolutely wrong. It is not possible to deploy in Zerodha due to 500 points limitation. Pranay is honestly, I'm telling, change the broker. See, simple for Zerodha. See, I'll not answer the question, but I want to answer this question. If someone wants to go for Zerodha, guys, answer me one question, that this is very important, right? Let's say there are like 1 lakh transactions. Tell me how many transactions will happen in Zerodha in terms of percentage. Is it 10%, 20%, 30%, 50%, 80%, 90% or 100%? Think twice before answering this question. Let's say there are like 1 lakh of transactions in the stock market today. Tell me what is the percentage of transaction will happen on Zerodha versus other brokers like Angel One, Upstock. I want answer for everyone in terms of percentage. Don't, right? Let's say, because the answer is associated with this your answer. Tell me like how many percentage, what is the percentage of transaction which gets executed on Zerodha? Someone said 60%. Good. Senthil said 60%. I'm just excited to know. I mean, how much of percentage gets transaction gets executed? At least 80%. Quick friends, fast friends. I mean, 80%, 80%. 10. Someone said 10%, 45%. So believe me, yeah, that would be somewhere between 70 to 80%. We all know that everyone will have Zerodha. So just imagine, friends, someone has, Pranav has asked this question, that Zerodha is not allowing the 500 points. See, pause, try to understand. 80% of the orders gets executed in Zerodha. So let me, you ask that question to yourself. Then how are the other guys deploying the debit spreads and everything? The only difference thing is like, first you have to sell your leg and then you have to buy. Zerodha doesn't allow naked buy for certain area. Let's say 5%, 10%. Simple. Again, I'm telling you, right? In Zerodha, first you have to sell and then you have to buy. If you do not have the capital, so then you have to shift to other brokers. We're not discussing about brokers. That's it. Absolutely. When you ask that question, I mean, Zerodha will allow you to buy provided you have the sold position in your terminal, in your broker account. It will not allow you to buy the naked buy by, like, they have one benchmark saying that 5%, 10%, above this they will not allow. But if you have the sold position, right, whenever you go for debit spread, first sell and then buy. But you know, right, the moment you sell, you need to have the margin. You got it right, because whenever you go for naked sell, you need to have that particular margin. So you call it, maybe you call it, that's a game of Zerodha, or I don't know. But if you go to Angel One, you can just go for basket orders. You can just go for buy and then you can go for sell. Okay, sorry guys, we have deviated now. So now the question is, okay, now the question is, everyone will think that the moment the market goes down by 1.24%, you'll get your maximum profit. No guys, okay, let me show you. Right, this 1.25% is your break even, but your maximum profit will start the moment market makes a down move of 2%. This is where, see, again I'm showing you this point. Okay, so from this point till this point is your minimum to maximum profit. Try to understand. This is your minimum profit. If the market expires here, you'll get medium profit, right? Medium, and the moment the market goes down, what is your sole position? Basically this one, 40,100. If market expires below 40,100, your maximum, you will get your maximum profit. Hope I was able to able to deliver, because this is a basic thing what you need to know, but still I'm repeating. Now the deal is simple, friend. The moment the market falls by 1.24% to 2%, you will be getting 35% on a capital of 20,000, 45. I've made so many times, but what do you need? You need the price action. If you are very good at price action, even you can go for the put debit spread. And whenever you go for put debit spread, you will get good risk to reward, because you know, right? Whenever the market falls, again, don't remember this Bible. Whenever the market falls, VIX will increase. Okay, so whenever the market falls, VIX will increase. That's the reason. So increasing VIX is increase in premium. Got it? So whenever the market falls, you will get into this risk to reward, because falling market will increase the premiums. That's what, right? In the debit spread, we are buyers. Don't even think like a seller. Whenever we go for debit spread, we are a buyer. We are not a seller. We are just deploying the sold position to minimize our loss, but you should behave like a buyer, not like a seller. Because debit spread, the meaning, the name itself, it has debit. What is debit? It is not a credit spread, it's a debit spread. Okay, so we want the VIX to go up so that the buying premiums has to increase. Okay, this is what you guys will learn in my paid program. Sorry for reiterating multiple times, because many people are asking like what extra we will be learning in the paid. These are all the pro tips basically, because these are all the minute things which majority of the retailers are not aware of it. That's where they go by deploying. See, but they'll not look out for this risk to reward. They will not look out for this risk to reward. They don't look at this POP. They don't even know what is this break even. They don't know when your maximum profit will start. If the market falls like quickly, right, you will get with your absolute profit on the next day itself. They target for this 35%, but we are not targeting for 35%. We are targeting 2%, 3%. But if you're very good at adjustments, market can give you 10 or 15% in your debit spread, because debit spreads are directional. Debit spreads are directional. With the direction, you get the absolute profit quickly. Okay, so are you okay with the put debit spread? And again, if someone asks me, what if the market goes against our view? You all know what all adjustments we can do. You can convert your debit spread to strangle. You can just exit your buy position and keep your sold position as it is. You can convert it to ratio spread. I mean, there are so many adjustments. If you guys want me to discuss about that adjustments, it doesn't even make sense, because you have all those videos in my YouTube. I've made my real trade videos. It is not something like I've shown you simulation. I've shown you all my real trades, how to do the adjustments. You can convert it to, you can exit this, you can convert it to strangle, you can convert it to ratio spread, you can just go for contra trades. Can someone tell me what is a contra trade here? For this put debit spread, if the market keeps going up, can someone quickly tell me what all contra trades we can deploy? I wanted to check. Right, this is very interesting. I wanted to check what I feel ICICI Direct is nice. Maybe they see. I mean, Sunil, it all depends on individual perception, right? You can go for every. See, that's what we're not discussing about the broker. I use Angel, right? I use Angel for options, because my capital is very low. My capital is low. If I have like bigger capital, I'll be using Zerodha. That's what my plan. The moment I have like bigger capital like 50 lakhs, 80 lakhs, definitely I'll go for Zerodha. Just because I'm into experimental phase, I'm using Sensible. Sorry, I'm using Angel, just not to get into that situation wherein I'm not able to buy. Okay, so what is the contract rate? I do have a, okay. What is that? C ratio spread? Absolutely, yeah. Call debit spread. I think call debit spread, see, that will again add up. See, what is call debit spread? Deep. right? When you deploy the call debit spread, again the downside you'll have loss, right? So that loss, your call debit spread loss plus your put debit spread loss will increase, right? That's not a good deal. Yeah, someone said call ratio spread, Mukesh. Yeah, that's a good thing, because even you have to deploy the call ratio spread in such a way that your downside loss should be zero. That's it. Your downside loss should be zero, right? Where even the market goes up, right, you should not be able to add more loss. You should be able to mitigate your loss because your view went wrong. Guys, answer me one question. If your view went wrong, I mean, are you targeting to come with profit, or you're targeting to minimize your loss, or you want to make your loss to zero or come up with profit? What is your ideal situation, boss? Let's say you've deployed the put debit spread, right? Market started going upside, right? You are deploying the contra trade. What is the purpose of contra trade? To come up with profit, or else to come up with low loss, right? Low loss, or with minimal loss. What is your deal? Tell me, this is very important. With minimal loss, low loss, minimal loss, or I would say zero loss. What is your strategy? What the purpose of deploying the contra trades? With profit, low loss, minimal loss, or zero loss? Someone said minimize loss to zero, loss to zero. I mean, when said Senthil, how can you say that? I mean, we can minimize the loss to zero, right? I mean, if someone says, right, I want to minimize the loss, that is a very good. So let's say my loss is to 3,000, right? Even I'll be happy if I get this loss to 1,000 rupees or 500. Yes, I can make it to zero also, but do you have that ability? Do you have that control? Do you have that emotion? Do you have that psychology? Do you know that trading style? Do you know that adjustments, how to make it zero loss? That's the biggest question, right? Yes, few people comes under this 1,000. If they should be able to reduce the loss of 3,000 to 1,000. Few people will come into this bucket, will be able to make it to only 500. Few can make it zero also, and few can come up with the profit also. It all depends on your trading style, your adjustment style. Just because I'm teaching you all the contra trade, that doesn't perfectly work. It all depends on where the VIX stands, on which day. Did someone ask me, right? When you deployed the put debit spread, the next day the market is going against you. So do you guys deploy the contra day on Friday morning? That's what you guys are going to learn from the paid training. I know the moment it goes against your view, people will just go and deploy the contra trade on Friday morning. Boss, contra trades has to be done only, it has a timing actually. First you have to manage your primary trade. If you're not able to manage, and then we have to think about the contra. That contra can be on Friday, that contra can be on Monday, that contra can be on Tuesday. It all depends on your psychology, the market condition. Where does the VIX stand? What is your MTM loss? Simply, right, your MTM loss or MTM profit will kill you basically. If you have the MTM loss of, let's say if someone is deploying with 10 lakhs, if you see 30,000, 40,000 of loss, you will not even think about all those contra trades. You will exit your trade. That's it, because you need to build up that emotion. You need to come up with that adjustments. You should know when exactly I need to do the adjustment, when exactly I need to deploy the contra trade. So profit equal to brokerage, zero loss, minimal loss. Yeah, Rajesh, you said minimal loss, but is that a diplomatic answer, right? When you say minimal loss, how much of loss? Let's say I wanted to ask this question. Let's say 3,000 is your loss. So what is your definition of minimal loss? Is it 2,000? I wanted to answer everyone to answer. Is it 1,500? What is the minimal loss? Or 1,000? Or let's say 500. What is your minimum loss? At what loss you will be happy if your view goes wrong? That's it, right? If your view goes right, you will get this 9,000 profit, absolutely. But your view goes wrong, your 3,000 loss, will you be happy if it becomes 2,000, 1,500, 1,000 or 500? Can someone give me? See, we have more time today, so we can discuss until 10 o'clock, but because this is a way you need to build your psychology, friend. I want this to be like more interactive. See, if I start making all the videos, right, you guys will watch it as a movie. That's it. I mean, so I wanted you to answer, right? Someone said 1,500, 1,500, 500 would be lost. See, absolutely. I'm so happy to see, right? That's what. it is not, it is not a holy grail wherein we will be making it zero. But believe me, if you know the tactics, if you know that minute things, right, I mean, how to do, you can come up with the profit also. But maybe to come to that level, you have to do all the real trades. You have to play with at least one quantity for 2 to 3 months. You have to see different market conditions. Do not have that expectation of making my loss to zero from your first trade. At least you have to deploy 10 trades, 12 trades, 15 trades, 20 trades. I have been practicing since from last 6 months. Right? I mean, I know basically, but still, see, I'm not making loss basically because I'm just playing with single quantity. Maybe tomorrow, if I increase my quantity to 10, 100, 200, so I might also come into that situation wherein I need to work on my psychology. But the strategy remains same, but only on the psychology perspective. What I meant to say is like net, you have to have that practice, and that is what you are going to get from the paid mentorship program. All right, someone said 2 to 3% loss. Okay, so I'm not sure, Nagendra, you have to consider like 2 to 3% of loss on the capital of 24,000, right? That is not the ideal case, right? So what is that 2 to 4%, right? This is directional trade. So then, Nagendra, what will be your profit then? If you said 2 to 3% loss, see, that's what, right? You're not calculating it correctly. So what is 2% on 24,000? So then are you looking for only for 2 to 3% of profit in debit spread? So I want Nagendra to answer this question. He said 2 to 3% of the loss. Yes, 2 to 3% of the loss is only on the capital deployed, but we have deployed only 24,000. So it should not be something like 2 to 3% of loss, but I'm expecting the profit of 35%. That way it will not work. Okay, 5% of the capital, Pranav, no, that's the wrong answer, right? So we are talking about this strategy. So what is 5% on 24,000? You calculate that. Right, the next day you'll end up into that loss. This is directional trade. This is not iron fry. All right, 1,000 rupees. Umesh says 1,000 rupees. Okay. Anything less than 3,000, 1:3. Okay. So friends, tell me one thing. Can we go to other, right? Can I show you like how to deploy the call ratio spread? Let's see, right, how to do the call ratio spread, my either or zero strategy. So we have discussed about this put debit spread. So put debit spread, absolutely, it's a very good trade, provided you know how to do the adjustments on the put side. But if the market falls, we all know, right, market falls, VIX will increase. This rising VIX will increase your premium. You'll get with your absolute profit in the overnight trade. I've shown you so many trades. Okay, so let's move on to the call ratio spread. Okay, this is going to be like very interesting, right? Your view is right sideways to bearish, but still, who knows, right? It can be, the moment you say sideways to bearish, it can be like sideways to bullish. So let's see what will happen if I deploy a call ratio spread. Okay, again let me take you to the chart. Okay, and let me delete everything. So now let's say your view is, let's say the market stands here, right? The current market stands here. So what if you go for call ratio spread? Okay, what if you go for call ratio spread? So what I'll do, I'll take it to sensible. Okay, I'll take it to the sensible. This is the negative trade what we are putting. So we know our view is like sideways to bearish, but intentionally we are deploying the call ratio spread because we know, right, whenever we go with one view, anyways the view goes opposite. But why don't we take it a chance? Okay, so now I'm going to deploy the call ratio spread. So got simple, right? I'll go for 230 or 250. Okay, maybe see, let me show you, right? I'll go for market stands at 41, 1 2 3 4 5. I'll go for 220. Okay, I'll buy this. Okay, what is the half of 220? I'll check for 5 spreads, 1 2 3 4 5. So perfect, this looks perfect, friend, right? This is my debit spread, and on top of the debit spread, if I want to go for ratio spread, I have to go for half of the premium. So 94 is something like 100, so I have to look at for 50 rupees. Let me say if I go for 50 rupees. Okay, now this is your ratio, call ratio spread. So your loss is 1,800. But again, this might be a wrong trade, right? Because what is this guy showing? I said my view is sideways to mild bearish, but again is showing me, right? So what? So can someone please tell me how to make this loss, right? Let me show you. This is good question. My loss is 1,800. How to make this loss zero? Can someone please let me know? You have the trade and everything with you. How to make this 1800 loss zero? You have all the legs. You have buy, sold. Can someone please guide me how to make this loss zero on the put side, on the downside? What strike price to choose for Nifty? Nifty we will discuss. No, Nifty is not a good for debit spreads. Do not even go for Nifty because of the reason, right? The reason is like you have only 50 rupees strike difference, so you'll not get feasibility. You'll not, it's not good instrument for you guys to do the adjustments, because when you go for Bank Nifty, it has 100 strikes, you will get 500 spread difference, so it will help you in terms of doing like 2 to 3 adjustments. But when you go for Nifty, that will give you only one option to do the adjustments, and then you are gone. We'll discuss. Can someone please tell me how to make this loss zero on the put side? Sell 2 lots of 42,300. Absolutely, yeah. Sell one more CE. Yeah, someone said sell one more CE. Okay, absolutely, yeah. Buy another call. Move the buy leg closer, right? Increase last sell quantity 1:1:2, right? From someone said from opposite side, right? Equal to loss. Sell one PE of 40 rupees. Someone said sell PE of 40 rupees. Let me see. PE of 40 rupees. Okay, but let me see, right? This is what I want to learn from also, right? Yeah, that's a good idea, right? So we were able to reduce the loss of almost like, see, let me show you, right? My initial loss was 1800. The moment I sold 45 rupees PE, my loss has reduced. Even this is a good idea. This is what, guys, you need to just think from. See, this is what you have to basically think. End of the day, it's not the traditional this thing, right? Someone said sell one more quantity, right? Let me show you that thing. Even I can do this thing, right? This is a traditional one. If I sell this to, yes, my loss from 1800, it has reduced to 593. This is good. Even this is good, right? I'll go for one. Someone said, right, sell 40 rupees of PE. This is absolutely good, right? But based on your view, right, sideways to bearish will not work. But if someone has the view of sideways to mild bullish or super bullish, this is a very good adjustment. Which one? Selling the put, extra put. But if someone has a view of sideways to bearish, we should not be going for this thing. So then the ideal thing would be this one. What did I say? This one, right? Don't go for put. Don't go for put, right? You have to increase the lot. That's it. You have to increase the lot. That's it. So from 1800, your loss is 593, and you all know how to make this 593 to 0 also, right? If you become very aggressive, you can go for 3, or else you can select the strike and the premium appropriately. So the takeaway from this thing would be like, whenever you go for this straight line, whenever the market falls, you will get with 0 loss, or else can someone please tell me, if the market keeps falling down, can we make this 0 loss to at least like 1% profit per week? If the market goes down, right? The market goes down, can we make this loss to 0 or 1%? If someone wants to make 1% profit, what adjustment he or she has to do? Can someone please let me know? This is quite interesting question, right? Let's say you have deployed a call ratio spread, then market slowly starting falling down. Okay, so can we make the loss from 0 to at least 1%? And if you're able to do that, what adjustments you guys will be doing? It's a very simple adjustments. After adjustments, margin should not be increased. Yeah. Let's answer this question, guys. I'm just literally waiting for the answer. The call ratio spread. How to make the loss 0 from 0 to 1% or 0.5%. Roll down. Anmantu says roll down. What roll down? Be very specific. Right, roll down. We have 3 legs, right? We have buy, we have one sold, we have second sold. You have to be like very specific. On Wednesday at the end of the day, shift buy leg outside. Okay, someone said buy another put. Absolutely, that's a very good. Yeah, plus Pranav says buy another put. Yeah, that's a very good. That's one of the non-traditional, right? Yeah, everyone will say that start rolling down your second sell to until your first and make it 1:2. This is good. Pranav said buy another put. Absolutely, when the market is falling, right? When the market falls, the beauty of buying the put is VIX will increase and your premium will increase, right? Rather than you shifting this call to your first buy, tell me one thing, whenever the market falls, right, the rising VIX will give you advantage for your buy positions or for your sell positions. I mean, I like the Pranav answer. That's it. I mean, I want some non-traditional things, not the traditional things. Traditional things we know. Everyone will say start shifting the start rolling down the call and make it 1:2. But Pranav said very good, right? Buy the put. When market is going down, so why should we think about selling the call? Why should we think about, right, rolling down the call? When market is falling down, we all know that VIX will increase, right? We all know VIX will increase. So when I'm rolling down the call, right, rising VIX, do you think that will decay the sold, I mean, the call sell premiums? No, right? Right, when the VIX is increasing, why should I roll down the call here? Because rising VIX will not give the theta benefit of the call. I mean, hope you're not, I mean, I'm not sure whether you're able to get. So the best thing is like buy one put, then take the advantage of rising VIX. I mean, there are like too many adjustments, but the one adjustments what I've liked. Thanks, Pranav. Right? I mean, the thought process is good for you, right? That's it. Buy one put and have a strict stop loss. Let's say someone would say, when I buy the put here, right? What if the market goes up? Was when the market goes up, right? See, let's say I'll take a very classic example. This is what you guys will learn in my paid program. That's it. Let's say market stands here. Okay, let's say the market fell down and you are planning to buy a put here. Simple PE buy, right? If the market keeps going down, the 600 will become 3000, 4000 also, because market falling down, VIX will increase. Let's say you put a stop loss of 50 rupees. That's it. If market comes up, right? If market comes up, so don't you think you'll have the opportunity for trapping the market in this green zone? Tell me one thing, right? This is what the contract rate. Buy the put with a strict stop loss. If the market goes down, your put will give you a huge profit. We all know that. But if the market is coming up, you will put 50 rupees stop loss or 60 rupees stop loss, right? You'll exit with the loss, but your trade is coming close to your green zone. Try to understand. This is what you guys will be learning from a paid mentorship program. We will be discussing with all 150 folks. We have almost like 150 plus folks. We are going to discuss about all these contract rates, and people like Pranav, like other guys also, right, who have this thought process, so they will also help us in terms of learning new adjustments. And even I'm super excited, right? If people like Pranav and other, like if they tell all these non-traditional adjustments, right, so then it's easy for us to retain in the market. Sorry guys, I've not seen the other question. Let me, right, buy PE and close the C, right? Yeah, Prabhu also is good, right? Pradeep Kumar 750. Any other questions, friends? So let's give a time check. So we are at 8:57, so it's almost like 1 hour. Good to see 51 folks watching this video. I mean, I hope I'm not making you bored. We are discussing very practical oriented thing, right? I mean, this is what you guys need to ask that question to yourself before deploying anything. And also on the adjustments, I'm seeing that majority of the folks are giving all the traditional adjustments. I want you guys to answer, I mean, tell the non-traditional adjustments. See boss, enough of traditional adjustments, right? It's all about non-traditional, and believe me, there would be like hundreds of non-traditional adjustments. And even I'm excited to learn from you guys. Any other adjustments? But what if market do not enter green zone? Yeah, see that's what, right? What's his name? I mean, see, there is no holy grail in the market, right? There is no heads and tails. You cannot say that heads is mine and tails is mine, right? So you have to deploy. So think about one more contract rate. Yeah, let's Pranav, tell me one thing, right? He has a very good question, right? Droj has a very good question, right? Yeah, we went for buying a put, right? The market is going against our view, so the stop loss is met, but it has not went till the green zone. So what we can think? Can you guys tell me? This is what the non-traditional, right? You have to think what is the percentage, how far I am from the green zone. Okay, let's say 30%, 30 points, 40 points. So keeping that in mind, you have to think, can someone think about going for call buy? Simple, friend. Can someone think about deploying a butterfly? at the same, like from your starting from your current market till 30.35%, can someone think about deploying a butterfly requires hardly 40,000 of capital, right? Can someone think about going for DRS, right? The your sorry, your back ratio spread, right? Think about going for naked call buying. See, there are like so many things. I mean, if you start thinking, right, you will get with the answer. I cannot do this spoon feeding. I'm just giving you the template. I'm just giving you, right, a sort of scenario wherein you can open up your thought process. Yeah, let me check out the question. Right, learning is never boring. Okay, exit that buy position of the C. Absolutely right. There are, you think that take the notebook. I mean, even see if you give me some critical condition, boss. Believe me, even I'll be not able to understand. Right, for me, the for me this payoff is very important. Without sensible, I'll be not able to trade. Believe me, without sensible or without obstra, I'll be not able to trade because I'm not to that extent wherein I'll be like calculating all the premium. Some people ask me a question saying that I took 41,000 at a premium of 50 rupees, I sold 38,000. I'll be not able to answer because I'm not into that situation. I did not went into that extreme level. For me, but the payoff. By looking at the payoff, I can answer any of your question. Payoff is must for me. Okay, what all adjustments? Someone said on the Wednesday end of the simply go for your expiry strategy of buy CP ATM and selling. See, that's what I mean. You do that. You have the Opstra with you, right? You have simulation. You can just play with the simulation. Okay, so guys, we have discussed about three strategies: iron fly. We have discussed about put debit spread. We have discussed about the call debit spread. The reason why I've discussed about the call ratio spread is like intentionally I've told, because you know, right, whenever you go for long, market comes down. Whenever you go for short, market goes up. Now your view is sideways to bearish. I know, right? Your view is sideways to bearish. I know. The moment you deploy put debit spread, the view will go to sideways to bullish. That's the reason I'm telling you, go for call ratio spread. Even if the market falls down, at least you can come up with 1% profit by all the adjustments what we have discussed in last 10 minutes. If market goes up, which is against your view, based on your original view, so then you will be able to trap the market into this green zone. Try this friends, I'm telling, because intentionally I've taken this example. I wanted you guys to go for call ratio spread even though your view of the market is bearish, because I know you see, because if you guys are smart enough, then you would have not joined my course. I know the reason you have joined my course is like you want to learn with me, right? Even I want to learn with you. We all know whenever we go for simple, right? I'll ask you the view of the market. You say it will go long, right? But tomorrow it will come down. Again, I'll ask you the view of the market. You'll say market will go down. It goes up. You know, right? Market is a sort of Gajani, right? Because all the big players, they get all our information.